$178,000. That's the number my mother-in-law was hiding the day she told my husband I was cheating on him. She didn't accuse me because she believed it. She accused me because I was 11 days away from finding the spreadsheet that would end her. For 6 weeks, my marriage nearly ended over a lie about a coworker I'd exchanged maybe 40 professional emails with in 3 years. My husband stopped sleeping in our bed, my in-laws stopped inviting me to dinner, and the whole time, every single day that lie bought her, Linda kept moving money out of a family trust that was never supposed to touch her hands at all. They thought they got away with it. They were wrong. My name is Sarah. This is the story of how a fabricated affair accusation turned out to be the thing that finally exposed a 6-year embezzlement scheme, how my husband and I went from the edge of divorce to filing a joint criminal complaint against his own mother, and how a lie designed to destroy me ended up being the exact evidence that convicted her. Stay until the end, because the twist isn't just what she stole, it's why she chose that particular lie at that particular moment, and how that choice is what finally caught her. Today's story is about greed, betrayal, and getting every single dollar back. But it's also about something a little different from the money itself. It's about how financial predators inside families will burn a marriage to the ground if it buys them enough time to cover their tracks. If you've ever been the target of a lie that was suspiciously well-timed, this story is for you. If this is your first time here, I tell true financial revenge stories every week: embezzlement, elder fraud, affinity scams, and the family members who commit them. Subscribe and hit the bell, because next week's story involves a business partner, a forged signature, and $340,000 that vanished from an escrow account in 14 months. Now, let's go back to where this actually started, because before there was an affair accusation, there was a trust account and a woman who never wanted anyone looking too closely at it. My husband Daniel and I married in 2017. I'm a certified bookkeeper. I run my own small practice doing books for local contractors and medical offices here in Raleigh. Numbers are quite literally my job. I notice when they don't add up. That detail matters more than almost anything else in this story. Daniel's father, Robert, died suddenly of a heart attack in 2015, 2 years before Daniel and I got married. Robert had built a modest but real estate portfolio over 30 years, 4 rental duplexes and a small strip mall unit, all held inside a family trust called Whitfield Family Holdings, set up specifically so that the properties would pass down cleanly to Daniel and his 2 siblings, Rachel and Tom, without the mess of probate. Robert named Linda, his wife and Daniel's mother, as trustee, with the explicit instruction, written into the trust document itself, that she manage the properties and distribute net rental income to the 3 adult children annually, while she herself was permitted a modest trustee's fee for her time. That fee, per the trust language, was capped at 5% of collected rents annually. On paper, this was a clean, loving, responsible estate plan, a father protecting his kids. What none of us understood in 2015 was that Linda had been named trustee over roughly $1.4 million in real estate assets, with almost no outside oversight, no co-trustee, and 3 grieving adult children who trusted their mother completely and had absolutely no reason at the time to ask for an accounting. For the first 3 years, Linda ran the trust the way you'd expect. Distributions went out, smaller than any of us expected, but not unreasonably so. Property maintenance, vacancies, insurance, and property taxes eat into rental income more than people realize. Daniel, Rachel, and Tom each received checks ranging from $6,000 to $11,000 a year, and nobody thought to question the math, because Linda had always been the organized one. The parent who did the taxes, balanced the checkbook, kept every receipt in a labeled accordion folder. She reinforced that trust constantly. She'd send quarterly updates, friendly, folksy emails with subject lines like, "Trust update, everything's humming along." She'd mentioned offhand how exhausting it was managing 4 properties solo, how she'd turned down remarrying partly because somebody has to keep an eye on your father's legacy. She positioned herself consistently as the sacrificing, overworked steward of something precious, which is a posture that makes people feel guilty for asking hard questions rather than suspicious. I want to flag something here for anyone watching who manages a family trust or estate or has a relative who does. The emotional framing of financial stewardship, I'm doing this for you, it's such a burden, I never complain, is not by itself evidence of anything wrong. Most people who say this are telling the truth. But it is also reliably one of the most effective tools used by people who are stealing because it preemptively makes the eventual questioner feel like the villain of the story before a single dollar has even been confirmed missing. Looking back now, with a forensic accountant's report sitting in a binder on my desk, there were at least 5 moments in those early years that should have registered differently than they did. Red flag 1. Linda refused every single year to provide full bank statements for the trust account, only summary printouts she typed up herself in a spreadsheet she controlled completely. When Tom asked once, gently, for the actual bank statements, just for his records, Linda got tearful and said she felt audited by her own children and that Robert would be heartbroken to see them treat her this way. Tom never asked again. Neither did the rest of us, for years. Red flag 2. The properties, all 4 duplexes, plus the strip mall unit, were fully paid off. Robert had cleared the mortgages years before he died. Yet, distributions stayed suspiciously flat, even as rent in our market rose nearly 30% between 2016 and 2021. Flat distributions on rising rent, with no mortgage payments eating into the difference, should have been an obvious red flag. It wasn't because none of us were tracking market rents against what we were told the properties earned. Red flag 3. Linda replaced the trust's original CPA, a longtime family friend named Walter Higgins, who had done Robert's taxes for 2 decades, in 2019. Switching to a smaller one-person accounting service, Linda said was cheaper and just as good. Walter had known Robert's intentions for the trust intimately. The new accountant knew none of the history and, we'd later learn, never once independently verified bank balances against what Linda reported to him. Red flag 4. Linda began taking 2, then 3 international trips a year starting around 2020. Funded, she said, by finally spending down some of your father's life insurance. Don't worry, it's separate from the trust. Nobody verified that claim because nobody wanted to interrogate a grieving widow's vacation photos. Red flag 5, and the one I think about the most. Every single time I brought up, even gently, wanting to understand the trust structure better, as someone whose actual profession is bookkeeping, someone who could have genuinely helped for free, Linda found a way to redirect the conversation, usually towards some version of, "Oh, Sarah, I know numbers are your thing, but this is a family matter. It's really between the kids and me." I was being professionally and personally shut out of the one area where I had the exact skill set to notice a problem immediately. That exclusion wasn't an accident. It was, I now understand, the single most important defensive move Linda made in this entire 6-year scheme. There's one dinner from 2021 I keep coming back to because at the time I read it as warmth and now I understand it as reconnaissance. It was Robert's birthday, the first one after his death that the family marked with any real ceremony. 6 years in, Linda hosted, made his favorite pot roast, put out an old photo of him on the sideboard. Partway through dinner, she turned to me out of nowhere and said, "You know, Sarah, I've always been so relieved Daniel married someone good with numbers. It takes such a weight off me, knowing there's someone in the family who actually understands finance." I remember feeling genuinely touched. I told her I'd be happy to help with the trust's bookkeeping anytime. No charge. Family is family. She smiled, thanked me warmly, and never once, in the 3 years that followed, took me up on it. Not once. I brought it up twice more over the following year, casually, the way you'd offer a favor to anyone. Both times, she deflected with some version of, "Oh, it's really not that complicated. I've got a system." I didn't think much of it then. I think about it constantly now. She wasn't declining a favor, she was closing a door before I ever got close enough to see through it. Something else I didn't fully appreciate until much later, Linda had spent years, quietly and consistently, cultivating a family culture where questioning her felt almost taboo. It wasn't dramatic, it was small things, repeated constantly. If Tom ever pushed back on anything, even unrelated to money, Linda would go quiet and hurt for days, and someone, usually Rachel, would end up smoothing things over. If Daniel ever disagreed with her about something at a family gathering, she'd bring up, gently but pointedly, how hard she'd worked to hold this family together since your father passed. By the time I married into this family in 2017, that culture was already fully built. Nobody had to be told not to ask Linda hard questions. Everyone had simply learned independently, through years of small social costs, that it wasn't worth it. That's not an accident either. Financial abusers inside families rarely need to enforce silence directly. They just need to make disagreement expensive enough, socially, that people opt out of the conversation on their own. In late 2023, Rachel, Daniel's sister, mentioned over a casual phone call that she and her husband were finally ready to buy their first home and needed to pull together documentation of her trust income for the mortgage underwriter. She asked Linda for a formal accounting letter. Linda took 11 days to produce a one-paragraph letter with a single lifetime total figure and no year-by-year breakdown, which Rachel's underwriter promptly rejected as insufficient. Rachel, frustrated, asked me, since I do this professionally, whether I could help her put together a clean summary of her distributions to satisfy the underwriter. I said, of course. And that's the small, almost accidental moment that started everything. I asked Rachel to forward me every distribution email and check stub she'd kept since 2015, so I could build a simple timeline. What I built instead over the following 3 weeks, working quietly on my own laptop after Daniel went to bed, was the first real outside independent look anyone had ever taken at Whitfield Family Holdings' actual financial pattern. And that's when I found the smoking gun. The first one anyway. Comparing Rachel's, Tom's, and Daniel's combined annual distributions against publicly available county property tax records, which show assessed rental unit counts and, cross-referenced with local rental listing sites, approximate market rents for comparable units in the same buildings, the numbers didn't remotely reconcile. Conservatively, the 4 duplexes and the strip mall unit should have generated somewhere between $138,000 and $162,000 in gross annual rental income by 2022, even accounting for normal vacancy and maintenance costs. The 3 siblings' combined distributions that year totaled just under $19,000. I sat with that gap for a long time before I said anything to anyone. In January 2024, cautious and still not entirely certain I wasn't missing something, I asked Daniel if we could sit down with his mother together and simply asked to see the actual trust's bank statements, not accusingly, just as a reasonable financial check before Rachel's home purchase moved forward. Daniel agreed. He loved his mother, but he also, to his enormous credit, understood the math I showed him didn't look right either. We scheduled dinner with Linda for the following Sunday. I remember feeling nervous in a way that had nothing to do with guilt and everything to do with knowing, on some level, that I was about to become a threat to someone who had spent 9 years successfully avoiding exactly this conversation. At that dinner, when Daniel gently raised the question, framed as carefully and lovingly as 2 people could possibly frame it, Linda's reaction was immediate and, in hindsight, remarkably well rehearsed. She didn't get defensive about the trust at all. Instead, she turned, looked directly at me, and said, "I think there's something else going on here that's making Sarah unusually focused on my finances lately. I've heard some things, Daniel, about her and someone at her office." I remember the room going completely silent. I remember Daniel's face doing something I had never seen it do before, a kind of confused, wounded blankness. Linda had, in the space of about 15 seconds, redirected an entire conversation about $150,000 in unaccounted rental income into an accusation that I was having an affair. Over the following days, Linda escalated. She told Daniel she'd heard from a friend who supposedly knew someone at my office that I'd been spending a lot of time with a contractor client named Mike Ferreira, one of maybe 15 clients whose books I managed. She implied, without ever quite stating outright, that our late evening phone calls, which were real and were entirely about a sales tax audit Mike's business was going through, documented in dozens of emails and my own billing records, were something else. There was no affair. I want to be completely direct about that, because this is the kind of accusation that, once said out loud in a family, takes on a life independent of any evidence. I had never so much as had lunch alone with Mike Ferreira. But an accusation like that doesn't need to be true to do damage. It just needs to be plausible enough, delivered by someone trusted enough, at a moment destabilizing enough to make the person hearing it doubt what they thought they knew. Daniel, God love him, did not immediately believe it, which, if I'm honest, hurt in a way that's hard to fully describe. For about 10 days, things in our house were tense in a way they'd never been in 7 years of marriage. He asked me pointed, uncomfortable questions. He went quiet for long stretches. He started sleeping in the guest room just to think. I want to pause here and be honest about something because I think it matters for anyone watching who's ever had a family member use a personal accusation as a financial smokescreen. The emotional damage from those 10 days was, in some ways, worse than anything the money itself had done to us. Money can be recovered with enough time and the right documentation. 10 days of your husband looking at you like he's not sure who you are? That leaves a mark that doesn't show up on any bank statement. What finally broke the tension wasn't a grand romantic gesture. It was, fittingly, documentation. I pulled every single email, text, and calendar entry connected to Mike Ferreira's account going back 2 years and laid it out for Daniel on our kitchen table. Invoices, time-stamped call logs from my business phone line, even the sales tax audit correspondence with the State Department of Revenue itself, which showed exactly what those late-night calls actually were. Me on hold with the state auditor's office until 9:40 p.m. on a Tuesday, trying to resolve a client's filing before a deadline. Daniel apologized. We're still working through what those 10 days did to us, honestly, even now. But something else happened in the middle of that reconciliation that changed the entire direction of this story. I want to walk through those 10 days more slowly because I think the mechanics of how a fabricated accusation actually operates inside a marriage matter as much as the financial fraud itself, and I suspect someone watching this is living through some version of it right now. Day 1, the dinner itself, ended with Daniel unusually quiet in the car, saying only that he needed to think. Day 3, he asked me directly for the first time in 7 years of marriage whether there was anything I needed to tell him about Mike Ferreira. I remember the specific, sick feeling of being asked to prove a negative. How do you produce evidence that something never happened on command without sounding like you're performing innocence rather than simply being innocent? Day 5 was the worst. Linda called Daniel again, this time with a supposed detail. She said her friend had seen my car outside Mike's office late at night. I checked my own calendar and mileage log, something I keep meticulously for tax purposes as a self-employed bookkeeper, and found no evening visit to that address at all in the prior 6 months. I showed Daniel the log. He believed me, mostly, but the seed had been planted deeply enough that mostly is the most honest word I can use for where things stood. By day 7, I made the decision to build a full, dated evidence file, not because I owed Daniel proof exactly, but because I understood, watching this unfold, that vague reassurance wasn't going to be enough to fully clear the fog Linda had created. I pulled invoices, call logs, my mileage tracker, and the entire email thread with the State Department of Revenue auditor handling Mike's sales tax case. I laid it all out, chronologically on the kitchen table on day 9. Day 10, Daniel apologized, fully and without qualification, but I remember him saying something that stuck with me for weeks afterward. I believe you completely. I just don't understand why my mother would say something like that if it wasn't true. That question, his genuine confusion about motive, not evidence, is exactly what sent us looking for a why, and the why is what cracked the whole case open. While rebuilding trust with Daniel, we started almost by instinct, reconstructing a timeline of exactly when Linda had first mentioned the affair to him. Daniel remembered it clearly. She'd first brought it up to him privately, over the phone, 4 days before our scheduled dinner where we planned to ask about the trust statements. 4 days before, not after we raised financial questions, before, which meant Linda hadn't reacted to a suspicion about me with a defensive counter-accusation in the moment. She had preloaded the accusation into Daniel's head days in advance, anticipating exactly the conversation that was coming, and positioning herself to detonate it the second anyone got too close to her books. That timing is what turned this, for me, from a devastating personal betrayal into an active investigation. Because a lie that well-timed isn't spontaneous cruelty, it's strategy. And strategy, unlike raw emotion, leaves a paper trail. One detail I have to include because it's relevant to anyone who relies on a professional to catch this kind of thing automatically. Linda's replacement accountant, the one she'd switched to in 2019, was not complicit in any of this. David's investigation confirmed that clearly, and no charges were ever pursued against him. But his review process was, by his own later admission during a deposition, essentially just compiling whatever summary figures Linda provided into a year-end tax filing, without independently verifying those figures against underlying bank statements. This isn't unusual, and it isn't necessarily negligent in a legal sense. Many small accounting practices operate exactly this way with clients they have no specific reason to distrust. But it's a critical lesson. A professional's involvement in managing family money is not, by itself, proof that the numbers have been independently verified. We have an accountant, and someone has actually checked this against the bank, are two very different statements, and conflating them is one of the quieter reasons schemes like this one can run for years without detection. Over the following weeks, while things at home slowly healed, I quietly kept working the trust numbers on my own time, now with a very different level of motivation. I discovered that Linda had, in the months immediately following our January dinner request, made several moves that, examined individually, might look innocuous, but together painted a clear picture of someone buying herself time and options. She switched banks for the trust's operating account in February 2024, moving funds from a regional bank where Robert had originally opened the account to a smaller credit union, citing better discounts, better fees. She requested and received from the trust's replacement accountant a full year-end summary that, we'd later confirmed through subpoenaed records, did not match the underlying bank statements by roughly $34,000. And she began, subtly, trying to isolate me specifically from family gatherings, mentioning to Daniel more than once that maybe it would be healthier if Sunday dinners were just family for a while, a phrase that in hindsight meant everyone except the one person with the professional skill set to catch her. By March 2024, Daniel and I made a decision, together, fully united for the first time since this began. We stopped trying to resolve this quietly within the family, and we started building a case. What made this investigation different from a lot of family fraud cases is that Daniel didn't just believe me eventually. He became my full partner in building the case, in part, I think, out of genuine guilt over those 10 days he doubted me. He pulled every document he had access to as a trust beneficiary. I applied the same forensic bookkeeping instincts I use for clients every week, except this time the client was my own marriage. We started with the full timeline spreadsheet, every distribution since 2015, every stated justification for the amount, every claimed expense Linda had listed in her annual summaries, cross-referenced against publicly available county tax assessor records, insurance filings, and, critically, actual rental listings for comparable units in the same buildings, which let us build a credible, defensible estimate of true market rental income for every year the trust had existed. In April 2024, Daniel, as a trust beneficiary, formally invoked his right under North Carolina trust law to request a full accounting from the trustee, a legal right that exists specifically to prevent situations like this one, and one Linda could not simply brush off with a folksy phone call the way she had for 9 years. When she stalled past the statutory response window, we retained an estate and trust litigation attorney, Marcus Webb, who filed a formal petition compelling a full accounting through the County Clerk of Superior Court. That petition is what finally forced bank records into the light. And once they arrived, we brought in a forensic accountant, David Chen, who specializes in trust and estate fraud specifically. Here is what David's analysis found after roughly 7 weeks of work reconciling 9 years of banking records against rent rolls and tax filings, and, critically, actual rental listings for comparable units in the same buildings, which let us build a credible, defensible estimate of true market rental income for every year the trust had existed. Of the estimated $1.02 million in true gross rental income the properties had generated between 2015 and 2023, roughly $610,000 had gone to legitimate expenses: property taxes, insurance, maintenance, and Linda's contractually permitted 5% trustee fee. Of the remaining amount that should have flowed to the 3 beneficiaries, David identified $178,000 in unaccounted, undocumented withdrawals made in irregular amounts at irregular intervals with no corresponding expense receipt, invoice, or beneficiary distribution on record. And that's when I found the second smoking gun, the one that mattered most. David traced roughly $61,000 of that missing amount directly to Linda's personal checking account through a series of transfers labeled in the trust's own internal ledger, which Linda kept, simply as management. Another $47,000 had gone toward 2 of those international trips, confirmed through matching credit card statements Linda had, ironically, once shown Daniel years earlier as evidence her travel was funded by separate life insurance money. The dates and amounts didn't match any life insurance disbursement at all. And the remaining roughly $70,000 had been withdrawn as cash in a pattern of transactions structured just under the $10,000 threshold that triggers a bank's currency transaction report. The same red flag pattern forensic accountants see again and again in cases where someone understands, even informally, that certain amounts draw federal attention and certain amounts don't. Rachel and Tom, once shown David's findings, were both stunned and, in a strange way, relieved. Each of them told us privately they'd had a nagging, unexamined feeling for years that something didn't add up, but neither had wanted to be the difficult one who questioned their grieving mother. Both agreed to provide formal statements and joined the eventual civil action as co-petitioners, which strengthened the case considerably since it demonstrated a consistent pattern affecting all 3 beneficiaries, rather than a single disgruntled family member. We also gathered supporting evidence from Linda's own public Facebook and Instagram posts, international trip photos with captions like, "Treating myself, you only live once," timestamped against the exact months David's forensic report showed unexplained cash withdrawals from the trust account. It's remarkable, honestly, how often people who are stealing carefully hide their bank statements but post their vacations publicly, with dates attached, without ever connecting the two. I want to give more space to how Rachel and Tom actually responded when Daniel and I first brought David's preliminary numbers, because their reactions taught me something about how families process this kind of betrayal in real time. Rachel, when she first saw the market rent comparison spreadsheet I'd built, went completely silent on the phone for almost a full minute. Then she said quietly, "I used to feel guilty for wondering about this. I thought that made me a bad daughter." Tom's reaction was angrier, more immediate. He wanted to confront Linda directly that same week before any documentation was locked down, and it took real effort from Daniel and our attorney to convince him that a premature confrontation risked exactly the kind of asset-shielding maneuver we later caught Linda attempting with the strip mall property. Both siblings, once they understood the scale of what David's forensic work was uncovering, agreed to a shared strategy: gather everything quietly and completely before anyone said a word to their mother again. That discipline, resisting the urge to confront early, even when angry, is, I genuinely believe, one of the main reasons this case ended in a real conviction and a real recovery, rather than another cycle of tearful deflection and unresolved suspicion. Between April and September 2024, our case file grew into something substantial. David's full forensic accounting report, running to 31 pages, tracing 9 years of trust banking activity against rental income estimates built from county tax records and comparable market listings. Formal notarized statements from Rachel and Tom, a complete dated communication log documenting the affair accusations timeline against the trust accounting requests, which Marcus Webb specifically flagged as relevant to demonstrating consciousness of guilt, legal language for evidence suggesting someone knew they were doing something wrong and acted to conceal it. Bank subpoena records showing the credit union transfer and the structured cash withdrawal pattern, and screenshots of Linda's own social media posts, timestamps against the forensic withdrawal dates. Marcus told us something during this period that stuck with me. Judges and prosecutors see a lot of he said, she said family disputes over money. What makes a case move is when the paper trail tells a story more clearly than either side's testimony could on its own. We spent 5 months making sure ours did exactly that. This didn't move in a straight line toward justice. There were real moments it could have collapsed. Near miss 1. In May 2024, shortly after the accounting petition was filed, Linda attempted to transfer the strip mall property, the single most valuable asset still held by the trust, into a newly formed LLC in her own name alone, citing liability protection improvements. Attorney Marcus Webb caught the recorded deed transfer within days through a standing alert on county property records and immediately filed for a temporary restraining order, freezing any further transfers of trust assets, which the court granted. Near miss 2, in July 2024, the trust's smaller replacement bank account, the one at the credit union Linda had moved funds to, was drawn down to near zero just before a formal subpoena for records was set to be served. Linda claimed the funds had been used for emergency roof repairs on one of the duplexes. No contractor invoice, permit, or receipt for any such repair was ever produced, and a physical inspection Marcus arranged confirmed the roof in question showed no signs of recent work at all. Near miss 3, the one that scared us the most, in September 2024, Linda's attorney reached out with a settlement offer: $40,000 split 3 ways among the siblings, full and final, contingent on dropping both the civil accounting action and any criminal referral. For about a week, exhausted from 9 months of fighting, all 3 siblings seriously discussed taking it. Daniel and I talked about it late one night and ultimately concluded that $40,000 against $178,000 in documented, provable losses wasn't justice. It was Linda buying her way out of consequences at a steep discount, and we told Marcus to reject it and continue. Near miss 4, in November 2024, just weeks before the case was set to move to the district attorney's office, Linda attempted to reframe the entire narrative to extended family and mutual friends, telling several people that Daniel and his siblings were trying to steal their inheritance early out of greed, and that the accounting dispute was really about Rachel and Tom being jealous of how close she and Daniel had always been.
For a tense few weeks, several of Robert's siblings, Daniel's aunts and uncles, sided publicly with Linda, creating exactly the kind of social pressure campaign designed to make pursuing the case feel not worth the family fallout. What ultimately diffused it was simple. Marcus arranged for David's forensic summary in plain, accessible language to be shared directly with the extended family members who'd been swayed by Linda's framing. Once they saw the actual market rent comparisons and the structured cash withdrawals laid out clearly, most of that public support evaporated within days. By October 2024, David's forensic report, Marcus's accounting petition findings, and formal statements from all three siblings were compiled into a comprehensive complaint filed with the District Attorney's Financial Crimes Unit, along with a parallel complaint to the North Carolina Secretary of State's Securities Division, since trust mismanagement of this scale falls partly under their fiduciary oversight authority as well. In December 2024, the District Attorney's Office filed criminal charges against Linda, one count of embezzlement by a fiduciary, a felony under North Carolina law given the amount involved, and one count of obstruction related to the falsified year-end accounting summary provided to the replacement CPA, which the state argued constituted knowing submission of false financial records. Linda was arraigned in January 2025. Daniel sat beside me, holding my hand, in a courtroom that felt almost surreal after everything that had led us there. A trust document written out of love, a fabricated affair, and now a felony indictment. The civil accounting action resolved first, in February 2025. Facing David's forensic report and the court-ordered accounting Linda's had been unable to satisfactorily produce, her civil attorney recommended a consent judgment rather than proceeding to a contested trial. The judgment, $178,000 in principal for the documented missing funds, plus $21,000 in accrued interest calculated from the date of the earliest identified unaccounted withdrawal, plus $31,000 in attorneys and forensic accounting fees, for a total civil judgment of $230,000 secured against Linda's remaining personal assets and enforceable against her share of any future trust or estate distributions. In June 2025, facing the civil judgment already entered, the forensic trail, and testimony from all three of her own children, Linda accepted a plea agreement, guilty to embezzlement by a fiduciary, with the obstruction charge dismissed as part of the negotiated deal.
She was sentenced in August 2025 to 2 years of supervised probation, removal as trustee of any remaining trust assets with a court-appointed independent trustee installed in her place, and formal restitution obligations layered on top of the already satisfied civil judgment, ensuring the criminal record and financial consequences would follow her regardless of any future bankruptcy filing. I want to give the fuller scene of that January 2025 arraignment because it's the moment this stopped being a private family wound and became something the state formally recognized as a crime. The courtroom was small, standard county courthouse fluorescent lighting, a docket with a dozen other cases stacked ahead of and behind ours. Linda arrived with her criminal defense attorney, a calm, unhurried woman named Patricia Sloan, who specialized in white-collar cases involving elderly or vulnerable defendants, a framing strategy we'd anticipated, given Linda's age and the gambling addiction that would later come out in discovery. The judge read the charges aloud in that flat, procedural courtroom voice: embezzlement by a fiduciary, obstruction, and Linda entered a not guilty plea, standard at the stage while her attorney worked toward the eventual negotiated resolution. The whole hearing lasted under 10 minutes. Daniel gripped my hand through the entire thing. Rachel sat on his other side, quiet, dry-eyed, the calm that comes after months of dread finally becoming something concrete and procedural instead of just feared.
At sentencing in August 2025, the restitution order was read into the record formally, by that point largely already satisfied through the court-supervised property sale, but the act of a judge stating it aloud, beneficiary by beneficiary, Daniel, Rachel, Tom, felt different from even the civil consent judgment months earlier. It felt like an official acknowledgement, on the record, permanent, that this had happened and that it had been wrong. Patricia Sloan argued for leniency, citing Linda's age, her lack of any prior criminal record, and the gambling addiction, which she framed as an illness rather than a calculated scheme. The prosecutor countered with the structured cash withdrawal pattern and the timing of the affair accusation, arguing both showed clear, deliberate concealment rather than simple compulsive behavior. The judge's sentence, probation rather than incarceration, but a formal felony record, court-ordered removal as trustee, and restitution obligations that survive bankruptcy, reflected, I think, a genuine attempt to balance those two arguments. Here's the piece that reframed this entire story for me, and it's the part I promised at the start. David's fuller forensic review, completed during the civil discovery process, traced the deeper pattern behind 9 years of quiet withdrawals. It wasn't lavish greed in the way I initially assumed. Linda had, in the years following Robert's death, developed a serious and escalating gambling habit, online poker and casino apps primarily, that by 2022 was consuming a significant portion of her monthly income and eventually the trust funds meant for her own children. The international trips were real, but smaller and less frequent than her withdrawal amount suggested. The majority of the missing $178,000 had actually gone into online gambling platforms, documented through subpoenaed transaction records tied to accounts registered in her name. And that reframes the affair lie, too, in a way that still unsettles me. Linda didn't accuse me of cheating because she genuinely believed it, and she didn't do it out of simple cruelty either. She did it because she was, by January 2024, deeply and secretly financially desperate, watching her late husband's legacy disappear into a gambling addiction she couldn't control. And the one person in the family with the professional skill to expose that was me. The affair lie wasn't really about me at all. It was the last, most desperate tool available to a woman who understood, correctly, that if her son ever fully trusted his wife's judgment again, her secret had maybe 2 weeks left to live. Daniel, Rachel, and Tom received their prorated shares of the strip mall sale proceeds in May 2025, along with a court-appointed independent trustee now overseeing the remaining 4 duplexes with full transparency. Quarterly statements sent directly to all 3 beneficiaries and their own advisors, not filtered through anyone with something to hide. Daniel and I used our portion to finally pay off the last of our own mortgage early, something that felt, honestly, like the most concrete possible answer to those 10 days in January 2024, when a lie almost cost us everything. I also want to talk about what recovery looked like for Daniel specifically, separate from the money, because I think his experience matters for anyone whose spouse has been manipulated by a family member's lie. For months after the plea agreement, Daniel struggled with a kind of guilt I hadn't fully anticipated. Not just guilt over doubting me during those 10 days, but guilt over the years before that, all the small moments he'd witnessed of his mother deflecting financial questions and hadn't thought to examine. We went to counseling together, specifically to work through that, and it helped enormously. I share that because I think there's a version of this story where the marriage doesn't survive the 10 days, regardless of how the financial case eventually resolves. And I don't think enough is said about how deliberately couples sometimes need to repair what a fabricated accusation damages, even after the truth comes out. We are fully no contact with Linda now by mutual agreement among all 3 siblings, not out of anger alone, but because trust, once verified as having been this deliberately and repeatedly betrayed, isn't something any of us are interested in rebuilding. Daniel sends a card at Christmas. That's the whole relationship now, and for the first time in years, none of us feel guilty about that boundary. Rachel closed on her first home in late 2025, using in part her restored trust distribution, the exact document request that started this entire investigation 18 months earlier, finally serving its original mundane purpose. If you take one thing from this story, let it be this. A personal accusation that arrives suspiciously close to a financial question is not a coincidence you should ignore. It's data. Here are the warning signs I wish I'd understood sooner. 1. Any accusation, especially a serious one, that surfaces right before or right after a financial question is asked. Timing matters enormously. If a personal attack lands the moment someone gets close to the books, examine the timing as carefully as the accusation itself. 2. A family trustee or financial manager who refuses to provide full, independently verifiable bank statements, only their own typed summaries. Legitimate stewardship survives an outside look. Only fraud requires the number to always pass through the same set of hands. 3. Flat or declining distributions in the face of rising underlying income. If you're a trust or estate beneficiary, it costs nothing to check comparable market rents or asset values against what you're actually being told you're owed. 4. Sudden changes to accountants, banks, or advisors, especially away from people who had long institutional knowledge of the original arrangement. New, less experienced, more easily managed professionals are frequently assigned someone wants less scrutiny, not more convenience. 5. Emotional framing that makes you feel guilty for asking basic financial questions. This is such a burden for me. I can't believe you'd question me. Your father would be heartbroken. These are real feelings some honest people express too, but they are also reliably some of the most common deflection tools used by people who are stealing. The presence of guilt tripping doesn't prove fraud, but it should never be allowed to end the conversation on its own. 6. Structured cash withdrawals just under reporting thresholds. If you ever see a pattern of withdrawals clustered just under $10,000, that's not thrift. That's someone thinking about what a bank might flag. And 7, the one this whole story turns on. If a lie about you personally shows up suspiciously close to a legitimate financial question you asked, don't just defend yourself. Investigate the timing. The people who fabricate accusations to protect a secret are rarely as careful about covering the calendar as they are about covering the money. If any part of this sounds familiar, here's the practical version of what I tell a friend going through it. Start a dated log immediately. Every conversation, every accusation, every financial question and the response to it, written down with the actual date, not reconstructed later from memory. If you're a trust or estate beneficiary, know that most states give you a legal right to request a formal accounting, and that right exists specifically for situations like this. 1. An estate attorney can tell you exactly how to invoke it in your state. Compare what you're told against something independently verifiable whenever you can. Market rents, tax assessments, comparable sales, rather than relying solely on the word of whoever controls the account. And if a fabricated personal accusation ever arrives suspiciously close to a financial question, resist the urge to only defend yourself. Build the timeline of when the accusation surfaced relative to the question, because that timing is very often the single most useful piece of evidence you'll have. Our case took 18 months from the moment I built that first distribution spreadsheet to final sentencing. It required a forensic accountant, an estate attorney, a formal court petition, and 3 adult children willing to stop protecting a parent's feelings long enough to protect the truth. It was exhausting, and it nearly cost me my marriage before it saved it. It was also, without question, worth every difficult month. If you've experienced anything like this, a family member who used a personal betrayal to distract from a financial one, I want to hear about it in the comments. You are absolutely not the only person this has happened to, and the timeline you build to defend yourself might end up being the exact evidence that exposes something much bigger.
Subscribe for next week's story. And until then, trust the calendar as much as you trust the bank statement, and never let a guilt trip end a financial question you have every right to ask.